What is going on, everyone? Welcome back to another video. We're going to be breaking down the E-minis. Once again, we're going to break down from the monthly, look at our weekly, look at our daily, and then give you guys an update on what our 30-minute shorter time frames are looking like with some destinations and some possible scenarios before the 4th of July week we have ahead next week, right? Actually, not next week, the week after, excuse me. So we'll have a full week next week. The week after next, we'll have a shortened week. But we got a lot to cover before we get into the month of July. So we have a full week left before we get into July. Monthly shaping up pretty well. Not too crazy about the price action we've had over the past several days. It hasn't given. I mean, there's been opportunities to trade on the intraday, but not as good as you would like. Volume's kind of dried up, range has dried up, and it's just one of those things you got to have to figure out and know how to really be patient and wait for your setups to come to you and not chase anything. So monthly, we have clearly broken out of balance from the smaller balance onto our larger extreme monthly balance high. Firmly one time framing up is how the monthly is shaping up. Really positive for buyers, right? Buyers' next destination is April's high of last year, right? Next target is that 45, 88, 50 level. We get up there. This market should continue to grind up higher and then potentially see the all-time highs. Maybe not this year, maybe sometime next year, because as the market kind of does its cycles of things, right? Usually, you'll get a nice little movement to the upside, consolidation on the dailies for a while, consolidation on the weeklies for a little while, putting ourselves into some type of balance, and then eventually getting some type of balance in the monthly in the larger picture before we break out and create some type of acceptance of higher price before we move up higher to get these other daily highs, right? We need to create more buyers and acceptance of higher price and continue to grind up higher, as well as other things in the bigger picture like macroeconomics and etc. So those are the types of things we kind of have to look out for. So monthly, still one time framing up, really healthy. Like I said, we want to see maybe this month towards the end of it, we get back up towards the 4,500 level, or we find some type of push next month in July, taking out this month's high and finally getting that April high. Now let's go ahead and look at our weekly. Weekly, we're going to call up to balance. We've been one time framing up for the past several weeks. One time framing up 3 weeks in a row now. This week is technically that is not what I meant to do. This week is technically the 4th week of upside action, even though it's an inside week. But I'm going to call it up to balance, right? Because we only traded inside last week's range the entire time. We've hit the, so we're going to move our balance zone, get rid of some of this old charting that I did earlier this month. And we're going to say that we are now in a 2-week balance. And all this means is like whenever we go from up to balance is if we continue to push up, or if we take out last week's high, not this week's high, but the previous week's high, we just continue to one time frame up, right? That doesn't stop anything. However, if we were to take out the low of last week's low, then we'll be one time framing down. So the scenario is a little bit different. We kind of continue the one time framing no matter what, or we firmly start to one time frame down and potentially fill in this premium gap here. Let me get rid of this target 1 because we've already hit that. We haven't quite hit our target 2 yet, which is 45.09 is my second target. So we'll put this 93.50 as our balance high. 93.50, and then our balance low at 51.25. 51.25. So buyers want to either continue to consolidate and move up higher, breaking above that 44.93.50 level, 4,500 level, and continue to push up on the weekly, which would further exasperate the movement to the upside. But consolidation on our weekly time frame is not bad. We've been one time framing up 1, 2, 3, 4 weeks in a row to have some type of consolidation and find more buyers and acceptance of a higher price. There's nothing wrong with that. Or maybe even flush out some of the week longs that have began taking trades up here or placing on trades. Flush some of them out and then reaccumulate for stronger buyers at a lower price to help move this market up even higher. So weekly up to balance is how we're going to look at it. Now let's go ahead and get into our daily. The daily is where things get a little bit interesting. Earlier this week, in a video earlier this week, we went over the daily, and I said the daily is in a balance. And then we proceeded to just kind of gradually set lower lows and lower highs. Now, could you have said this was like a 2-day balance, and then we've been one time framing down for 3 days? You could, but for me, my balance area was the 44.93.50 level to the 43.83.50 level, which was the 14th low and the 16th high, right? That's how I was looking at it. Today, we approached our balance low and pierced through it just a hair. So I don't know whether to call this market down or say that we've just stretched our balance low. You can say that this market is down, right? To say that we've been trending down, that the market's been one time framing down 3 days in a row, and there's nothing wrong with that, right? Charting and everything in the market is an art and not a science. So you can say that we've been one time framing down since we've been taking out low or setting lower lows and lower highs on our on the daily for the past 3 days, and pretty weak action from buyers today, as well as weak action from the sellers, as there was opportunities on both sides early on for the sellers to take control and really push this market to the downside, as we opened up with a gap below the previous day's low, and then got nothing for it. The second day in a row, actually, we've opened up with a gap to the downside, and then it gets filled, only to find that the buyers are just as weak to the upside without holding any type of trend or anything like that. So this market's been trying to roll over. I think I'm going to say that we are in a balance. All right, I think I'm going to say we're staying in balance. We've only stretched our balance low. However, if we come in Monday and take out today's low, the daily will firmly be one time framing down for me. And then I'd be targeting this premium gap fill. Let me get rid of this this real quick. That's some old charting as well. Be looking to fill this premium gap fill and then test our 20-day moving average. So the last several times we've come back to our 20-day moving average or our 50-day moving average, we've managed to get some type of bounce, right? We bounced here, we bounced here. We do have some gaps below us, but we've bounced once, twice now, 3 times around the 20 and 50-day moving average. Do we pull back into the 20-day moving average, fill in this premium gap, and then find buyers once again in this 4,300 level, and then bounce to continue to grind up higher? In order to do so, we'd be one time framing down, need to find some type of consolidation, maybe above where this, like I said, the 4,300 level is, before doing such. Or do we continue to push lower? We also have another gap here. Should probably highlight that to keep that in our minds, in the back of our head. Or do we continue to pull back, pull on back, and then at this point, the 50-day moving average is right around this gap, and we test it and bounce once again like we did the last 2 times. Those are just some scenarios, right? I'm not saying that that's what the market's going to do, but right now the market is in a balance. We are attempting to find acceptance of higher price up here, but all these people up here, all the buyers up here, right? Some of them have already been washed out, and now we've reaccumulated some more buyers at this balance low area. If we take it out, then all this inventory up here will get washed out to the downside and be reaccumulated elsewhere, whether it be here at the 20-day moving average or be down here at the 50-day moving average where this gap fills, which is not what buyers really want to see at that point. But like I said, we want to see some type of acceptance of higher price. Now let's go ahead and look at our 30-minute time frame. Not a lot for me on the trading this week. I took the last trading day I had. Actually, yesterday I traded. I took one trade. I've just been taking one setup a day, as my schedule hasn't really allowed me to sit down and trade the full trading day with work and everything. So today I didn't trade at all. Thankfully, thankfully I didn't. The only trade I would have taken was later in the day on this trend down towards the end of the day, but nothing significant today for me to get involved here. I took a trade in yesterday's session on this pullback around the 4,400 level. I actually was long around the 4,404 level. A 30 lot, and it bounced up really good. I was looking for it to test around the 1816 level. We bounced up really nice, and I got out of that trade for a pretty good profit because I was down initially from earlier in the week, only a couple points, but I was still down, and then this put me up significantly on the week. So today I didn't want to give any of that away, especially with us being in balance. Risk to reward is worse, and my favorite setup to trade, things like the afternoon pullback low or the afternoon rally high, have been less reliable since we've been in some type of balance. Now, if this market goes trend down and we have things like single prints to lean against, then things like an afternoon pullback low, like on this day here, would be very, very beneficial to have in your playbook, right? But since we've been in balance, we've had several days with Y points of control. We had a Y point of control back on the 20th, Y point of control back from the 9th, and then we created another Y point of control yesterday, basically 2 ticks below where the Y point of control. We had a 10 Y point of control on the 21st, and then yesterday a 9 Y point of control, basically in the same price range. Yeah, so 9 Y point of control, and then today we only go out with today's high and today's low, and didn't even dip after taking out the 14th low here, not getting much below it or getting into the set of single prints from this day here, not getting a whole lot down here, no extension, no tempo, no nothing. We just bounced right back up into the day's range and finished with a pretty choppy session. So nothing to lean on as far as trading day goes. Whole lot of chop here. And you can expect the exact same thing if we open up inside today's range, is a whole lot of chop, especially since we are at what we'll consider a balanced low area from my standpoint, where people could be entering swing positions to rotate back up to the highs, right? From the low, or from the high down here to the low, is roughly 100, anywhere from 100, let's say 80 points. About 80 points to the downside, 80 points to the upside. So, not a whole lot to trade against inside this day's range. So for the upside destinations, if we open up inside the day's range, you'll look to take out today's high, 44.08, right? Look out to take that. If you take out today's high, you will grind up towards the 9Y point of control, which is a magnet, 44.15.25. We get above that, you will continue to grind towards the high of 44.30.75, and then another 9Y point of control at 44.34.50. 44.50. And then we do have a gap that starts at 44.75, and that gap fills at 44.51. For the downside, we take out today's low. We'll be one time framing down firmly on the daily time frame, and be getting into the single prints back from the 12th of June, which was earlier this week, Monday. 43.80.75 is where it starts. 43.76 is where they fill. And then 43.74.50 is the next set. And then the next that fills at 43.68.50. Below that is the afternoon pullback low. So these would not be things to lean against initially. If we come out of balance to the downside with some type of tempo, they would become targets to fill. So you'd be looking to target shorts to come in and fill these areas and hit these destinations on the downside. So with that being said, ladies and gentlemen, hope you all have a wonderful weekend, and we'll catch you next week, where hopefully I'll have a little bit more time to post more videos. If you did make it to the end, you like this content, please leave a like down below and comment. We love comments. We'll catch you next time.